All right. Good afternoon. Good afternoon. How's everybody doing? Yeah, it's good to see you guys here this afternoon. We did have a good class last night, John, didn't we? It was a good class at the university, and we had a lot of fun. Talked about day trading, and that's what we're going to do today. We're going to practice what we preach. Yeah, last night we talked about the playbook, and we looked at the all the recurring price patterns and the line of scrimmage and where to put the ball. And we played trading like a football game, right? And so today we're going to practice a little bit about what we talked about. Now, one of the most important things we talked about last night in class was we talked about the different types of orders. So we're going to go through and we're going to practice with those a little bit today. And then I'm going to show you a couple neat little tricks that you can do if you have the track and trade software. All right. And it's the software I like, and it makes it really easy to trade. And I'm going to show you the setup. So if you have the software now, I recommend that you go pick up the software so that you can come along and I'll show you the settings. That's what I'm going to do today, show you the settings. And so you need to go over to trackandtrade.com and download your software. Now, the one we're using is the futures version. And the reason we like the futures version is because there's no pattern day trading rules. So that means you can trade to your heart's content. Long and short, you can go up and down. Doesn't matter. They don't care. You can make money either direction. If the market goes down, you make money. If the market goes up, you can make money. All you have to do is pick the right direction. You buy first, you buy low, sell high. It's the only way you make money, but you can sell first and buy back low later. They let you do that. And I'm not going to go into all the details about why that's okay and why you can do it. Just know that you can. If you think the market's going to go down, you hit sell. If you think the market's going to go up, you hit buy. And then to get out, you just do the opposite. All right. So that simple, that easy. And we're going to show you the settings that are in the track and trade software. So download your version. I'm using, again, the live futures version because there's no pattern day trading rules. You can open up an account with as little as $2, $3, $4, $5,000 and get started doing this if this is something that kind of blows your dress up, makes you happy. So if you do the stocks version, not that stocks day trading isn't good, it's fun, we like it. There's just, you don't have the leverage for one, and so it takes a lot of money to make a small amount of profit. Over here, it takes a small amount of profit to make a large amount of money. Now, anytime that you have that advantage, right? Anytime there's an advantage, there's also a disadvantage. The advantage of that is that you can make a lot of money with a small investment. The disadvantage is that you can lose a lot of money with a small investment as well. So be careful. All right. Be careful over here. If the market doesn't just immediately go in your favor when you get in, then get right back out, take a small loss, and then you can recover those little small losses a lot easier than if you hang in there thinking it's going to come back to you eventually, because you're on leveraged markets and it can go a long ways and may never come back. The market can be irrational longer than you can stay liquid. All right. So don't think you can just hang on and it'll eventually come back, because it may never come back. All right. So get the futures version if you want to day trade and not have pattern day trading rules. Pattern day trading rules means that you have to have at least $25,000 in your account before you can, or you can't day trade. If you don't, in the stock market, you have to have $25,000. If you have less than $25,000 and you start day trading, they'll close your account down for 90 days. They freeze you out. So don't do that. Don't go over there and try and day trade in the stock market if you don't have at least $25,000 in your account. So if you're going to trade, you probably want to have a little bit more than that, maybe 30,000. So put 30 grand into your account, then you can trade to your heart's content over in the stock market. But if you don't have 30 grand to, start your day trading venture, then start over here in the futures market, where you can start with as little as 2,000 if you stick in the micros, the small accounts, and then the minis probably ought to have at least 5 grand to do that one. All right. And then I'll help you, and I'll help you see the settings and set up your software so your software looks like my software. All right, let's see if we can figure this out. I don't know why it does that. It used to not pop me full screen and then back down again, but now it does. Changes. All right, so what we're looking at now is we're looking at the NASDAQ. This is a 2-minute chart. You see the market's dead. And it's no fun to day trade when the market's dead. It's easy to trade when the market's lively and making nice trends and moving through the markets. It's easy, right? I mean, look at these little arrows. You just, if I'd have just sold on the arrow, made a lot of money. If I'd have just bought on the arrow, made a lot of money. But if the market's just going dead sideways like that, you can't make money. So the hardest part of trading is knowing when to pull that trigger, when to get in, and when to anticipate that the market's going to rise or fall in its direction, right? And so us as traders, The biggest challenge we have is knowing when that market's going to move. Now, so what we do is we generally say, okay, well, we'll wait until it's moving first and then we'll join in. But, then you kind of miss it. But that's okay. It's okay if you miss it a little bit. But if it's dead like this, you can see how it's got lots of topping tails and lots of bottoming tails. That's a bad sign. We like flat tops and flat bottoms. All right. Flat bottoms along the green bars going up. We like flat tops on bars going down. If they have lots of topping little tails on that downtrend, that starts to show weakness. We're not real fond of that, as long as it doesn't come back and break those yellow dots. So what we're really going to play is we're just kind of playing these yellow dots. As long as it stays above the yellow dots, we stay long. As long as it's below the yellow dots, we stay short. It looks like it's coming up here and wants to bounce off of this green line. This green line is a 100 period moving average. The blue line is a 200 period moving average. You see they're coming together. We've also got the VWAP, volume weighted average price. And so that one is sitting up there as well. So we don't know. The market's going down, right? It's making lower highs and lower lows, just like we talked about last night. Let me come down here and make this a little bigger for you guys. So we have lower highs, right? And then we have another high, lower highs, and now it's turned around and it's trying to go back up, and it's trying to make maybe a reversal and going back up. But right now, this is the previous high right here. So we have to be mindful that that's the previous high. That's the wrong tool, Lan. Grab the right tool. Here we go. So there's our previous high. Is the market going to turn and start to fall again and make one more fall? So you got drive 1, drive 2, drive 3. Now we got to go back a little farther to see what this looks like back here. But yeah, that's pretty much what we're seeing. So there's the chance that we could get a turnaround. So drive 1, drive 2 up, drive 1, drive 2 down. So we're kind of in a neutral zone right now. It's trying to go higher. So what we could do is we could come in here. This is the NASDAQ on a 2-minute chart. We go down to a range bar 10, see what it looks like. Ugh, that's ugly. Let's go to a range bar 50. This market's just dead, isn't it? It's not doing anything. 2-minute chart. What are we going to do? Let's go look at a different chart. This is the 2-minute chart on the Dow. It's dead too. We're not getting any fun. We're not having any fun. No fun. No fun to be had. Well, right here, we're at least, I thought for a second we're going to get a little down, a little up, and another little down. I thought it was going to break right there on that range bar 6, but it failed to go down. This is a range bar 6, so it's you got to be fast on this one because it moves a lot. Look at the little snaky pattern. It's hard to make money when the market's just snaking. We want it to be a nice, smooth trend. It's dead market. See this little indicator right here? It's almost right dead center. That's just floating right along that histogram center line, that 50% line. That's not good. We don't like that. We like markets to get up here into these little indicators. We like them to get up into the extreme high or the extreme low. Once we have that down in there, then we have a pretty good idea that once we get an arrow and it's coming out of there, that we can anticipate a rise in price. But this one, just even though it rose in price, it was weak. And we're making lower highs and lower lows, so we got to watch across that too, right? Got to get our little trend line in there. So as long as it stays below the trend line, we can stay in. But this is the first little, remember we talked about little triangles. So this is our first little triangle. Came down here and back up there, right? And then we got another little triangle down here, and it came back up here. Now it's kind of trying to make another little triangle. I don't know. We're going to get another third little triangle down here before it goes back up. I don't know. Oftentimes that's what we get. We get 3 triangles. It's trying to fall. It's pretty weak. Do you want to get in? If you want to try it, I mean, I know we shouldn't be trading this, but you want to do something. I mean, you don't come here to watch somebody trade and then they don't place any orders. So the wise decision would be to walk away from this table right now, but let's do it anyway. All right. So we're going to say, well, we're going to think this market's going to continue to fall. So we're going to come in here. We're going to take a short position, and we can go in with 1 or 2 or 3. Maybe we'll go in with 2. We're going to put 1 stop in here. Now this is a stop to get us out if we're wrong, right? So we're going to put that right, wrong, right, wrong, right. I got to put this way up here, and I'm going to show you something. We can put that way up there, and then I can come in here and go edit. And now this is our little screen. We can come in here and we can say we're going to trail this on those little green dots right there. Those little green dots are the ATR. So we say, okay. And it comes down there at the ATR. Now we're only trailing with 1, but we're short with 2. So we can come in here and drop another one in here. Well, maybe we'll put that up here just a little bit farther above this previous high. So we got 2 stops in here to stop us out with both positions. and we take a small loss on both of them. But if a market does fall, we would make money if the market falls, right? That's taking a short position. Means we're going to sell first and then buy back low later. The market, they let you do that. Don't worry about it. They let you do it. So that's okay. Now, in the stock market, if you're going to do that, you have to look up here in the right-hand corner of your chart, and it'll tell you, it'll say easy to borrow. Because in the stock market, you have to actually borrow your shares. In the futures market, you don't. All right. There's no fees. There's no interest rates. There's no dividends you have to pay. None of that stuff over here in the futures market like you have to pay in the stock market if you take a short position. But over here, they just let you go short, and then you buy back low later. And that's okay. They let you do that. All right, it's falling in our favor here. We're getting a nice little move, getting this little third triangle down here. We're up $350. Our goal is 500, right? So if we come in here, watch this. We can come in here and we can right click on that little triangle. And we can say add OCO and see how those are hooked together. One of them's a stop and one of them's a limit. Remember the limit order? The rule for the limit order is that it'll take profits off there. So all we're going to do is slide that up to $500. And if it hits $500, then we'll take that baby off, right? And then these are our stops. Now we have 3 stops. This is for 2. These are 2, 1. We can get rid of these that we put in manually, or we can keep those. But if it touches this one, it'll take that one off automatically, whereas it won't take these 2 off automatically. But the difference is I broke these apart, so they're at different levels. So it's bouncing. It's coming back again. Look, we're already back down to $140. That sucks. Let's kill these 2 here because they're not attached, and these 2 are attached. So what happens if it fills this one, it kills that one. If it fills this one, it kills that one. And we can bring this one down. We can have it trail on the little green dots, or we can move it down even closer. Watch this. We can say, oh, I'm scared. I can move it aggressively. The little green dot's too far away. Okay, well, then come down here and go edit and say, I'm going to just trail 1 price bar back. Now we got to use the OCOs down here. That was no OC up there. So we're going to come in here and we're going to say trail. And we can just go price bars back, and we can just go 1 price bar back. And I'm going to go 1.1 because that spread is about 1 wide. So we'll just go ahead and accommodate the spread with a 1.1. We say price bar back. And now it's just, see that? It'll just trail it down 1 price bar back. As soon as it's no longer making lower highs, it'll get us out. It almost came down and touched our $500 on that move right there, but we didn't take it off because it didn't quite make our $500. That was our target zone to the limit side, right? That's our limit order. It's going to take our profits off right there. You can come in here and say, it looks like it's going to fail. Oh, no, we can just get out right here and just take your 50, 60 bucks and be happy with that and wait for another setup. But we'll just let it play through and see what's going to happen. We know this market's pretty weak, so we'll have to wait and see if it's going to follow through. It looks like it wants to come back and stop us out. But we'll give it another shot. Just give it a second here. It's trying to go down. The thing is if you get out, you're like, oh, take your 120 bucks right now, Lan. Just get out, hit exit, take your $120. Well, then if it keeps going down all the way down to your 500, then you feel bad. So you feel bad either way. You always feel bad when you're trading. Doesn't matter what happens, you feel bad. You didn't make enough money, so you feel bad, or you get stopped out and lose money and you feel bad. So you always feel bad. It doesn't matter what you do, you always feel bad. Just know that when you trade, you're a trader that always feels bad. Okay. Oh, see how it automatically moved? So it dropped down. It said, well, we got a new price bar. It'll give you a new price bar every 2 minutes because we're on a 2-minute chart. It's trying to come down. It's trying. We need people to sell, right? Sell, sell, sell. Remember, there's a 1 buyer for every seller. And the reason the market goes down is people get excited about the market going one direction or the other. They get excited about the market going down. So they start sell, 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 and the buyers will buy, but the sellers will pay more for it than the buyers, which is the spread. And that's what causes the market to move. All right, there they go. They're getting excited about it. Keep coming. Well, yeah, we're excited about the short position. Come on, you're almost there. You're almost there. You can touch it. Go ahead. It's like candy. It's candy. Come on, touch it. If you get nervous, you can grab this stop and say, well, if it comes back, we're just going to get out. Come on. Yes, I want to do it myself. Come on, touch it. There, we got it. $500. All right, class is over. It's no fun when class gets over 10 minutes into class. Our goal is $500 a day. Keeps the doctor away. Do you guys have your lemon water? Keep yourself hydrated while you work so hard out here in the hot sun of the financial markets. Markets have just been flushing today. A big down day in the stock market today. See, now you feel bad. Why didn't you stay in, Lan? You'd have made a lot more money. It's still going down. Oh my gosh, why'd you get out? Well, let's come over and say hi to a few people. There's Jay coming in with the gold. How you doing, Jay? Good morning. It's good to see you. John, we did have a nice class last night. Great to have you there. Bruce, nice to see you in class last night. It's good to see you here today. Bushcrat, Bushcrat, Busicrate. It's nice to see you, man. I always struggle with your name. I don't know. You're going to have to explain how I'm supposed to pronounce it. Bouskrat. I think you told me once. You think I can remember? Chad, nice to see you, Chad. It's good to see you in class last night as well. So we've got last class for Lan tomorrow. Yep, tomorrow night. Last class at the university this semester. This semester is over. So we won't be back at the university until fall semester. I'm taking summer semester off. We'll be back for fall. And then during the summertime, I will be still doing the labs here on YouTube. So let's just keep coming back to the labs. Make sure you like and subscribe so that you get notified whenever I do a lab. But I'm going to keep my labs up. Doesn't mean I'm going to do them every day like we do during the school year, but we'll change the schedule up a little bit probably. But we'll keep doing them. It's fun. We like to do it. What sounds are those, Chad? What sounds are those? Christopher McDale. Oh, hi, all. Gwen here. Oh, hi, Gwen. Nice to have you. You said that you came in under Christopher. It was nice to see you in class last night. Looking forward to our one-on-one meeting tomorrow. So we will make sure to do that. And Jeff, good to see you. Glad to have you. Gary White, everybody putting their name out there. Anybody else wants to say hello? We'll make you famous. Put your names up there. We got a lot more people watching than what are saying hi, but got a nice group saying hi today. So Bouse Cray, just call me Nate, if you can remember that. Great class last night for sure. All right, man. It's good to have you. Glad to see you in class last night. Glad to see you here today. My goodness sakes, look at that market flushing. See, I told you, you always feel bad when you're a trader. You always feel bad. If you get out and take your profits and then the market keeps going, you feel bad you didn't stay in. Or if you stay in so that the market will give you time to go and make you money and it goes back and stops you out, then you feel bad too. So you always feel bad when you're a trader, but don't feel bad when you hit your goal. So our goal is $510 a day and we've hit our $500. That doesn't mean we're going to stop trading. We're going to go ahead and do some more. Let's go look at another market, see if there's not something else we can trade. This is Bitcoin. Bitcoin's been a little slow, and look how wide the spread on it is. I don't like wide spreads. That's at range bar 10. It's been a little quiet in here. Let's go see about a 2-minute chart on the Bitcoin. Well, I don't know. So you're going to say, I can hear you guys out there right now saying, Lan, I got the track and trade software. How do you get your charts to look like that? All right. What this is the Heiken Ashi bars. And Heiken Ashi is actually a indicator that's laid over the top of, or actually not even laid over the top of. It's mathematically integrated into the price bars. So if I turn off Heiken Ashi, this is what a normal price bar looks like. This is a 2-minute chart price bar. Now, if we come down here, let's come to this 2-minute chart, turn off Heiken Ashi. This is the one we were trading before. And that's just a normal chart. I don't like normal charts. I like Heiken Ashi charts. So Heiken Ashi in the track and trade software can be turned on in 2 ways. One is you can come in here and right click and you'll notice that you have price bar types. You have open, high, low, close, you have high, low, close, you have close, you have open, you have candle. Wait a second. Where's Heiken Ashi? It's not in there. Well, Heiken Ashi isn't actually a candlestick style. It's not even a price bar style. It's an indicator laid over the top of or mathematically applied to a price bar. So you can actually come in and you can hit an open, high, low, close bar, which looks like this. And we can make those price bars proportional width so we can bring them nice and fat like that. And then we can turn on Heiken Ashi. And if you notice, Heiken Ashi is now part of the open, high, low, close bar. And it's not necessarily for just the candlesticks. And that's why you don't have Heikin Ashi in that list, because Heikin Ashi is not a price bar type. It's a filter that's put on the price bar. So if you have different kinds of price bars, you can still have Heikin Ashi. Does that make sense? All right. Some people like to trade this type of a bar. They don't like those candlesticks. Candlesticks are cute. They're kind of like, Christmas lights. Look at them. Look how cute they are. We don't need proportional width if we got candlesticks on, though. So I like the candlesticks. They're kind of cute. And so I like to turn Heikin Ashi on over the top of candlesticks. But you can also turn Heikin Ashi on over the top of the other. So if you want to turn on Heikin Ashi, you right click, you come down here to chart preferences right there. See that? Chart preferences. And it's a clicker thing right there, a little clicker box. And you can turn it on and off right here. Now, that's how you turn on Heikin Ashi on any type bar. Now, for me, there's a little shortcut. Now you can hit that and say save as my defaults, update all charts, and then all the charts will save these defaults. Now, another thing I like to do is on my candlesticks, when I come down here to the bar color, I like to have this be open to close. Change yours to be open to close. I recommend that be open to close. Sometimes when it comes out of the box, it's closed to close, or it's closed to close. I like open to close. All right, so make sure you do open to close. And then I like to fill the candles. They can be hollow if you want. There's nothing wrong with that. That's usually for black and white monitors where you have black and white. So the filled in ones are the down ones and the not filled ones are the up ones. And that's how you do black and white charts and know the ups and downs. But since we have color, we're Technicolor. Go ahead and fill those candles in, and you can do that. And then we come down here and we say save as my defaults. Boom, just like that. And that says Heikin Ashi is turned on. So that's going to be one of my defaults. Now, every time I open up a new chart, it's going to make Heikin Ashi. Now you're like, well, I have charts open. Did it make those Heikin Ashi? No, you have to say update all charts. And then they would all look like this. So then you hit boom, update all charts. Now, any of these other charts that were open are now all going to have Heikin Ashi turned on. And they're going to be open to close. So now when we come over here, and there's a shortcut to turn on Heikin Ashi. Now watch this neat little trick. These little button bars up here are customizable. You'll notice that mine are a little bit different than everybody else's. I have an arrow here and I have an arrow here. I have multiple tools in here at the same time. So some of these like Fibonacci is over here. I got %R is over here, and I got another one over here. I got tools in here, multiple tools on, because my screen is so big and I've got a lazy hand. I don't want to, every time I want to get a tool, I don't want to have to go way over here to get this tool if I can just put it in here. So I customize these toolbars and I add in some of these just because I don't want to have to drag my mouse all the way over here just to get a line tool, when I can just put a line tool right here and I can get it closer. All right, that's just me. It doesn't have to be the way you do it, but I will show you this little handle. See this little handle right here on these toolbars? You can grab that little handle and you can move that handle to other places, and you can attach it. It's kind of funny. It doesn't move at the same time. Anyway, you can attach it to different places on your screen, or you can take it off and just have it float. But for me, I like it to be up here on the button bar. But if you right click on that little handle instead of left click, it'll give you a menu. See that little right click menu? Say customize the toolbar. And it brings up this cool little screen that says these are the available tools and these are the current tools. So then you can come down here and you can find Heikin Ashi in the list. Now I've already taken it out of this list and moved it over. So it's already in the list. You can see it's right there. See Heikin Ashi. I moved it from the box that says available over to the box that says current on the toolbar. And then you could move them up and down. So moving them up, move them down, move them around in that toolbar to different locations, whether you want to have them, wherever you want to place them. And then that's how you customize your toolbar. Hit close, and then you can just toggle on Heikin Ashi on and off using that little button right there. And you don't have to, every time you want to turn Heikin Ashi on or off, you don't have to right click, slide down here, go to chart preferences, and turn off Heikin Ashi here. Just a little shortcut. That's all it is. Just a little shortcut. That's a little trick Lan's showing you here. Just use this one right here. All right. Now, that's how we do it. Now, I'll show you something else that's kind of funny about the software. Oh, that's too many charts on the screen at once. Let's not do that. I'll show you that another time. Oh, wow. What's that? That's Dow Jones flushed like a toilet today. Yep, it sure did. But we've been predicting this, right? We predicted it. X2SA1, not a real high probability, and down it's going. We're headed towards that X3SA1. Where's the S&P daily chart? And I'm not going to go off on this. I know I go up on this all the time, but We called this X1SA1, that S&P. We do not think it's going to rally. That's a real low probability of success, and that's where it's at. So we called for that thing to break below that next level. And we said this market, we anticipate it being down in this region here somewhere, right? So that's the S&P. That's the stock market. We don't expect it to go up from here. We expect it to come down into this region here, and there it is. It's coming down. It's breaking lower. So today it's breaking lower, and we're going to come down here to the monthly chart, and we're going to see how much farther down we got to go. Well, the S&P, I think we're going to see it down here. I hate to say it. Doesn't mean it has to go down there. It could get a little bit smaller one. Something looks like maybe this, right? Or maybe one of these, or maybe one of these. But given the history of what these patterns have done, this thing at least needs to come down and break those blue lights. So we got some additional downside potential, and if it came all the way down to there, it wouldn't surprise me at all. If it comes all the way down to that previous high right there, which is 47.83. So 47.83 is that previous high right around there somewhere. And that's where I think this market has a good chance of going to. Is it going to go there? I don't know. It's just probabilities. Just the probabilities of a long-term monthly chart. I know nobody wants to see it go down there, but that's where these mathematical models are saying it's going. It's got nothing to do with Trump's tariffs. It has to do with how the big boys who manipulate and create these markets for us to trade manage and manipulate these markets so they can make money. All right. Is it going to go up from here? Possibly it could, but I just don't think it is. I think we're going to get something like this. I think we're going to get a little something more like that than like this. Remember this one here, the reason I didn't circle that's Corona. That was how big Corona was. We remember that's lousy Corona. All right, I'm not going to go off on this. I spent too much time on this yesterday. All right, here we go. Here's the S&P 2-minute chart. Still flushing down. If we draw our natural trend line across there, we got how many of these do we have? We went from here to here to here. There's one little triangle, right? Down to another triangle, just like that. And we're down here working on our third triangle. So we'll see. We don't know where that triangle is going to go. It could come all the way out here, could be back here, could go a long ways down. We don't know. We're going to wait and see. We're going to see if it makes it could keep dropping. We're getting a little, not perfect, but it looks like a little shelf in there. Now remember, little shelves break out the bottom and they keep going down. We call those little pennant formations. I call them shelves just because I only draw the bottom side. But if you draw the upside, it ends up looking like a little pennant formation. And oftentimes we like to take those short. So I don't know. We'll give it a shot. See if it'll drop out the bottom of that. We'll try one. And we're going to put a stop in there. We're not going to let it take a lot of money away. If we're wrong, we're wrong. We'll just admit we're wrong. And if it doesn't go out the bottom, we'll lose a little bit of money here. But we're not. We got $500. We'll see if it'll give us a little bit more as it drops out the bottom of this little shelf here. This little pennant formation. How far is it going to go? Well, we don't know. Usually it goes about the distance of the staff. The staff of the flag. Okay, so we're going to come in here, and the staff of the flag looks like it's about that far. So we're going to come in here and we're going to say, we're going to estimate, make a scientific wild ass guess that market might come down this far. That would be a little break, and we take that little Fibonacci ruler and we can do that from the high to the low, back up to the high right in here, and then that gives us that little projection down, right? So that's how that's done. And then we just measure it and we say, hey, count, measure, setup, trigger, and follow through. All right, that's how we trade. Count. What do we count? We count how many triangles there are, how many waves in the pattern. Count, measure. What do we measure? We're measuring how far those markets have moved in the past to see how far we can project that they might move in the future. Count, measure, setup. What's the setup? Well, this little trigger point right here. That's the setup. That's our little pattern that we learned last night in class. All those little patterns are the setups. What's the trigger? Well, when it breaks that natural trend line right there that we drew, that's the trigger for entry. And this again is a short position. So we're trying to make money when the market goes down. So that would be your trigger, and that's what got us into this market. And then what's the follow through? Well, the follow through is how do you get out? Where do you get out? Where do you take your profits at? So we have count, measure, setup, trigger, and follow through. If you write that down, and follow that strategy. And if you ask those questions to yourself every single time you get into a market, you'll have a better chance of pulling some of these games off, right? It doesn't look like it wants to fall, does it? It's being a little stubborn. Being a little stubborn. We're going to move this little, if I can get that in there. It looks like it's a little bit more down here. We're still trying to break that lower pattern in there. There's not really a solid line in there. Not really an area of support, but we're getting a little fall out the bottom. It's trying to test that low right there at 38.2 right now. If it'll break that, it'll continue. Otherwise, if it can't get past that low right there, it will probably just want to get out. Let's make it bigger so we can see this a little better. So that's where we're fighting against right now. So it's the bulls running against the bears, right? So we might want to bring our stopper in here and say, if it comes all the way back up there, we'll just get out with a scratch trade. So we want it to go immediately in our favor. If it doesn't, we'll just get right back out. Not going to give away any of our $500 at this point. We had to risk a little bit to get, but it's got to break that point. That's what we're doing right now. It's fighting, trying to get past that point. Come on, baby. Let's see if you can do it. Come on down. Come on down. Come on. What do you want to do here? Flushing out. Where do you want to take your profits at? We can come in here and add. We're going to come in here and we'll take them off at another $500. So we'll hit that 50% projection. We got one stop at break even, so we'll just leave that there. Wait for a second, see if it'll take it off at a $500. There we go. All right, so that's $1,000 we made today. Go ahead and hit exit chart. We'll get rid of that last stop order. And that's a nice little move in the market. And there you go. That's how it's done. So we go look at another market and see what's going on. Let's come over here and look at this 2-minute chart and see what these guys are doing. This is the little mini cousin Russell. Little cousin Russell in here. And look at that market. Wow. If you'd have got in there and just rode that thing all the way down from that arrow and just stayed in until it touched that green dot right to there, it looks like we get in on this crossover here to that green dot. That would have been a $2,335 move with one contract. And how much money would you have had to put in for that? That's, if we come over here to the key, it'll tell you right here. It's going to put in your day margin because we're day trading. On this one here, this is the Russell. It says $446. We generally figure $1,000. I'm a little surprised that says 446. Let's go see what the others are. Let's go look at the Dow 2-minute chart. Let's come down here to the key. Day margin, $638. Wow, they're lower in those margins in here. Of course, this is the demo account, so take it with a grain of salt. That's $1,400 on the NASDAQ. Now, that makes more sense because the NASDAQ is a little bit more aggressive, a little bit more crazy. So you have to have a little bit larger amount of money to invest. So each time you click one, that's $1,000, right? So if you go into the key, $1,400 in this case. Every time you add one, you have to have $1,400 in your account. So if you got $5,000, you could put on in here, roughly two or three contracts. If you come in here and you're trading the, let's go look at the Russell. Let's go look at the S&P. We looked at the Russell already. So we come over here to the key and we look in here, day margin. We'd have to have $1,000. So $1,000 to trade the S&P 500. It looks like it's trying to fall some more. You want to get back in on a break below that previous low? It's just toying with it. I don't know. You could try it. There's not much of a risk. You already made $1,000. You could try it and see if it wants to keep the flush down. But before you do that, do your little measure. Make sure that you're going to do a scientific wild-ass guess where you think that thing's going. 61.8 is kind of our magic number, so we really wouldn't expect it to come down much further than that. That would be where we'd put our target. And I put our last target in there at, just said $500 profit, but this would be a projection profit. So we're going to just watch and see. All right. We think the market's going to come to 61.8. It's kind of the golden ratio, and that's generally where we anticipate markets coming to. So we can just watch that for a second and see how how it comes down. If it breaks 61.8, oftentimes the market will bounce at 61.8 and go back up. But if it breaks that 61.8, the next section is 100. Now I put 90 in there because, it's kind of like markets never do exactly 100% of everything you ask them to do. So I put that 90 in there just to say, well, if it makes 90% of what we wanted it to do, that's pretty good. I'm happy with 90. So I'll take profits off at 90 and not try to wait for it to go all the way to 100. Let's see if it'll come down and touch 61.8. Oftentimes, a lot of guys, and you've seen us do this. We do this here in this class. We'll come in here and we'll stick a limit order at 61.8, just like that, and see if we can't get filled on that one for a rebound. So come down, hit 61.8. Sometimes you want to put it just inside so it makes sure it hits it. Doesn't come all the way to 61.8. So we'll see if it'll come down to 61.8. How accurate am I? Oh, I'm right on the money. There we go on all three of those. So my calculator's set proper. So let's see if it'll come down, touch 61.8. If it does, it'll bounce off that and hopefully rally, and we'd go with it. So we got a limit order in there. Remember, we talked about this last night in class. Kind of a weird strategy where the market would have to come down, get filled, and then turn around and go back up. And we use these Fibonacci projections or these high probability turning points to make those decisions, and that's what that is. So we'll just wait and see if it'll come down to 61.8 and fill our order. Doesn't mean it can't just continue and break on through and keep coming down to 90 and 100. It would. And if it did, and we didn't get out, we'd lose money, right? All the way down that distance. How much would you lose, Lan? Well, again, this is $1,000 investment, and we would lose if we got in here and it went all the way to, we let it go all the way to $100, we'd lose $800. So that's $800 to that point per contract. One contract. Now we don't use shares in the futures market. We use contracts. All right. Because one contract in the futures market can hold any number of things. Because think about the futures market. We're not trading the stocks like in the stock market. We're trading commodities like gold and silver and crude oil and corn and wheat. And it's hard to trade all those different things if you were trying to do it with share prices. They'd all be different because crude oil is measured in barrels, right? We measure crude oil in barrels. We measure corn, wheat, and soybeans. We trade those in bushels. And silver, we trade those in ounces. Gold, we trade those in ounces. So to have a universal form of measurement, we just say one contract. And then in that contract is how much of whatever it is that we're trading we put into the contract. So we say one contract represents, 10,000 bushels of corn, or 5,000 bushels of corn is in one contract. And then we might say, 10 ounces of silver or 10 ounces of gold is in one contract. So a single is the smallest percent you can have, but then we might have minis and micros. So like this is a mini account. So if you come over here to the key again, the key's kind of the key to the whole thing, comes in and tells you how much is in here. Now this is a S&P 500, so it's a basket of money. All right. So how many contracts, how much money is in one contract? And in this case, we're going to come in here, and right now it's currently $272,200 is in one contract. All right. And that's going to change because as the market goes up and down, that number will change. So they'll change it. But right now we're sitting here with $272,200. And that's why with $1,000 investment, you can make so much money because you have the leverage of, and we try to spell it out here so it makes sense. One contract represents $50 at S&P stock index current price of 5,004 equals $272,000. That's a lot of money you're controlling with your margin of $1,000. That's why you make so much money with a small investment. Small investment makes a large investment because you only have to put down like a 1% down payment. Now, market's turning around. It didn't quite make it all the way down to 61.8. It tried. Remember what I said? Sometimes the reason I got 90 in there is because it won't go all the way to 100. It'll come close. Well, 61.8 is the same. It came down and tried 3 times. Failed to get that 61.8. It couldn't push to it, and it's sitting here, right here. Randy. Len, you make it look so easy. I find it's not. It's not so easy. Well, you know what? I don't find a lot of things easy that I haven't done for 40 years, but I've been doing this a very long time. So, Randy, don't feel bad. It just takes a little practice and a little time and a little effort and a little energy, and you just keep doing it and don't have unrealistic expectations. And don't try and stay in for the big, huge run. Just take a little piece out of it. That's all we're trying to do. Just trying to take a little piece out of it. And we try lots of stuff in here. I mean, you've seen me walk away with thousands of dollars in losses before as we practice and try new things and different strategies, right? And sometimes the market's just not moving. And like I said earlier, it's easy to trade and make money if the market's nicely trending and moving. It's really hard to make money if it's not, if it's just going sideways. It's not easy to make money when a market's not moving. So our biggest challenge is knowing when to trade, not how to trade. How to trade is easy. I mean, if the market's going up, you hit buy. And if it goes up and keeps going up, you make money. And then you get out when, you made enough money. When you're happy with how much you've made, you get out. So it's not hard to trade when the market's moving and shaking and making nice trends. It's hard to know when it's going to do that. That's what makes trading hard. And we have impatience. And so what we do is we force trades. We're like, oh, I need to make some money today. Doggone it, I got to pay my bills. And so you're like, oh, I'm going to make some money. I'm going to make some money. And so anytime you put that kind of pressure on yourself, it makes it a lot harder to be a successful trader, because you don't have to trade a lot. You just have to trade correctly, right? You just have to pick the right direction and have the market be going in that direction when you pick it. And let it go until you make $500 and then get out, or make $300 or $200, whatever, and then get out. And then when it does go against you, just get out immediately so that the winners can pay for the losers. If you stay in and that market goes $300, $400, $500, $600, $700, $8,000 against you, that's where you're going to blow your account up. That's where it's going to take you a long time to recover and get that money back. It's really hard. That's why I often say the maximum amount of money you can lose in a day is twice your goal. So if our goal is 500, the max we can lose is 1,000, because then it's going to take us 2 days to get our money back. But if you lose $5,000, it's going to take you it's going to take you forever to get that money back if your goal is 500 a day. So don't sit there and allow these huge losses. If the market's going to, not just continue to make higher highs and higher lows on a price bar style once you get in, if it doesn't just immediately move in your favor once you get in, just get right back out. Don't take big losses. And so that's the name of the game. Don't feel like you have to jump in all the time. You call yourself an active trader, but active trader means that you sit for a long time staring at the market, waiting for the right opportunity, waiting for the count, waiting for the measure. If the order doesn't go to where you expect, well, you missed out on it. Wait for the next opportunity. There's so much money to be made in these markets that you don't have to trade all the time. You just have to kind of get the right little moment and wait for those right little moments. And you actually do better if you don't trade a lot. You're actually going to do a lot better if you don't trade a lot. Trade very little. Trade very little. And if the market's going down like this, see how the market's going down like this, lower highs and lower lows like that? Well, take the short positions like that. Don't try and take the long positions. Counter trends are hard to make money on. The trend is down, so only take the trend direction, which is, in this case, down. So take these reds. Don't take the greens. Take the reds. Don't take the greens. Take the reds, as long as it's in a downtrend. Now, this was choppy, choppy, choppy. That would have ripped our wheels off trying to trade down through that. But it had 3 little drives in there. You can see drive 1, drive 2, drive 3. And then it had this little counter trend. And it almost looks like it was trying. The greens were smooth, but the reds were gnarly. And then it turned and went the other way. The green was smooth, and then we had a nice long green, a red one, and then we had this little gnarly thing here. And then the green was it wasn't too bad. And then we had this flush here, and that's the one we caught. We caught 2 of these, right? We caught this twice. So there's where we made our money today. And that's all we had to do is catch that one little spot out of this whole thing. One little spot, we made $1,000. Just don't overtrade. Just sit here, and once you made your money, you can kind of sit on your hands and you can be really picky about where you want to go in. There's our notice. We got 15 minutes till the bell. But we've made our $1,000 And I'm going to have, yeah, that's good advice there, Randy. I've learned from you not to trade in a sideways market. That's not trending. You've given great examples many times. Yes, I've lost a lot of money exampling trading in a nice sideways trend, haven't I? So that's why I get these little guys, right? Because these little guys, I don't want a sticker on you. These little guys, if the market's not moving, this is the power that I have to move the market. We can stab these little guys. These, that's where that's our power. That's our power. Look, we're getting a signal right there. Little break in the green dots, and it looks like it wants to go. You want to take a short position? Go ahead, take one. Boom. I hit the wrong button. Let's see. There we go. We'll try and take a little short position on that. Is it going to go? Are we going to make money? Probably not. Every time you get in, think, I'm probably not going to make money doing this. So what are you going to do if you don't think it's going to go in your favor? Every time you get in, think, it's probably not going to go in my favor. Okay, well, then I'm going to protect myself so I don't lose a lot if I'm wrong, right? That was funny. Where did that come from? Name that tune. Anybody recognize that? Am I good enough to be able to get you to recognize? Nobody can remember. Nobody recognizes my joke. Isn't that from The Wizard of Oz and the monkeys? Okay, that thing just dropped, made us another $275. Let's just pop it out right there. All right, didn't give us 275, gave us 85, so that didn't work too well. Oh well, that's all right. All right, I got something for you, everybody. I appreciate you coming, and I would like you to just take 1 minute and listen to Claire talk to you about Pit News Magazine, because we all love Pit News Magazine, and Claire wants you to learn a little bit about Pit News Magazine.
Hey everyone, it's Claire here. Are you ready to take your trading knowledge to the next level? Welcome to Pit News Magazine, your trusted source for trading intelligence. Whether you're a seasoned trader or just starting out, this magazine delivers the insights you need to stay ahead of the market. Featuring articles from experts like Dr. Scott Brown, Aidan Gray, myself, and of course Mr. Lan Turner. Pit News brings you exclusive strategies, deep dives into market psychology, and powerful trading techniques. Find out about the exponential power of growth, seasonal trading secrets, and even Lan's latest wild eye, crazy eye iron butterfly strategy. Each issue is packed with expert trading strategies, top stock picks, key seasonal trading insights, and comprehensive analysis of commodity futures and ETFs. You'll also find tips on technical analysis, option strategies, and much more. No matter your trading interests, we've got you covered. And the best part? You can learn your way. Listen to each recorded article, read the full in-depth lessons, or watch our video breakdowns. It's trading education on your terms. Right now, we're offering a special deal. Get your first full year of Pit News for only $19.97. That's 50% off the regular price. 12 issues of powerful trading insights, backed by our 100% satisfaction guarantee. So, don't miss out on this limited time offer. Head to pitnews.com and subscribe today. Empower yourself, enrich your trading strategies, and stay informed with Pit News Magazine. Trading intelligence right at your fingertips. Okay, let's get back to Mr. Turner. Thanks for sticking with me.
All right, that's it. If you guys had fun today and you thought that you learned anything, go ahead and hit that little thumbs up. It always lets me know that you appreciate the work that we've done here at Pit News Magazine and at Utah Tech University to bring you these classes. And I'm looking forward to seeing you guys that are part of the university tomorrow night for our final class of the semester. We're going to have a big party and get drunk. No, I'm just kidding. We got a lot to learn, though. I got a lot of information to impart to you in our very last class. So see you tomorrow night, Udvar Hazy Building, room 204. Same bat channel, same bat time. All right, guys. We'll see you tomorrow. Thanks for coming today.